So for Forex and 5 this week, over in developed markets, relatively quiet at the moment. We're listening to a lot of economists and institutionals trying to predict when this raft of rate cuts is going to come later in 2024. Seems to be fairly split between sort of June and July meetings for both the Fed and the ECB, but for the Bank of England, perhaps a little bit later in the year. So expect to see some cuts lagging in England versus Europe and the US. But I think the market's fairly dictated at the moment. Seems to be thinking the euro is going to end around 109 to 110 by the end of this year, which is pretty much where we're at the moment. So this whole soft landing, unless we see some massive surprises on inflation, should metastasize over the next sort of 9 months. So there's not really too much to report, but obviously it's something that we're clearly monitoring quite closely. Over in emerging markets, Nigeria, we've seen a new Eurobond due to be issued, a 7-year Eurobond, likely in around June time. So it'll be interesting to see how much interest that garners. T-bill auctions have been a little bit slower recently, so suggesting perhaps there's a bit lower foreign portfolio inflows lately. This is likely impacted by Egypt, which we'll come on to in a minute. But otherwise, with things like bans on crypto platforms, a bit more control from the CBO, we've actually seen a lot of stability in the Nigerian market at the moment. The parallel market is tracking the official window quite closely in sort of around 1600 levels, so nowhere near the amount of volatility that we've seen in recent months. But the task is going to be, how can the central bank start to bring both rates a bit lower back towards 1200, 1000 levels? That's got to be the goal over the next sort of 6 months. And they won't want to leave the parallel behind if they start to bring the official window lower. But it remains to be seen what will happen there. Over in Kenya, we've seen a big bout of appreciation again. There was the big drop about a month ago from the sort of highs of the sort of 160 to 170 levels back down to high 130s. Over the last week, we've seen a bit more appreciation. Again, a lot of this is being driven by what the banks are able to offer, what the CBK are permitting them to do in terms of what levels they're allowed to sell dollars at, the volumes they're allowed to sell dollars at. But things like inflation prints recently have obviously painted quite a positive picture. Similar to Nigeria, there's the big drive for Eurobonds being issued as well in Kenya. So the yields on those bonds would be quite interesting. We might see some, I guess, competition in the region, particularly as I mentioned in Egypt, their big devaluation recently has had a huge impact on the market. There was billions of dollars being traded daily on cash as suddenly Egypt became the EM darling basically in the market among institutionals. Suddenly in somewhere like Nigeria, where the 22% yields on T-bills were looking quite attractive relative to the 12% seen previously, all of a sudden now you can get low 32% yields in Egypt, plus everyone's anticipating appreciation in the pound from the recent devaluation. So it remains to be seen if it's too good to be true in Egypt, but there's no doubt that FPI, foreign portfolio investment, at least in the short term, is hyper-focused on getting in as much Egypt paper as possible, which may pull away from Nigeria and Kenya, etc. In Tanzania, there's been a nice bit of appreciation recently, sort of seeing levels drift back well below 2,900. So we'd like to think this is just general volatility in the market. Obviously, it had been very stable towards the back end of last year. Hopefully we'll start to see a bit more stability there. There's no specific macro drivers. There's been a few moves in the cabinet, but nothing too concerning. There was a thought that the current trend was heading the shilling towards 3,000, which just seems unreasonable compared to where economic fundamentals are relative to a lot of other African territories. But we'll start to see it drift back below 2,900, probably a bit more permanently in the short term. And in Central African franc, a bit of disparity between ZOF and ZAF. So ZOF, there seems to be quite a lack of liquidity in the market at the moment. We're seeing Euro ZOF levels drop below 690, having reached sort of 700 levels not so long ago. ZAF is still trending a little bit higher. There seems to be a decent amount of liquidity in the market, so that spread has widened a touch, but we expect to see it narrow back up at some point in the short term. Zoff liquidity probably will pick up again and will create a new base.